BigBear.ai Holdings, with the ticker BBAI, closed the last trading session on October 8, 2025 at $7.29 per share, marking a dip of 2.02% for the day. Now, on the surface, a 2% move for a volatile small-cap AI name might seem like just another Tuesday. The common perception is that this is just the noise you have to endure for a shot at exponential gains. But the real story behind that simple percentage drop is far more intricate than just market chop. It has less to do with the broad, flashy narratives you see surrounding names like Nvidia Stock, and more to do with the very specific and often opaque world of U.S. government contracts and the tightrope walk between federal dependency and commercial ambition. The expectation is that you're buying a piece of the future of artificial intelligence. The reality, you're buying a specialized government contractor that's trying to convince Wall Street it can be something more. Most investors, especially those getting into online investing through accessible platforms like the Robinhood app or SoFi Invest, see AI in a company's name and immediately think of scalable software, massive commercial markets, and the kind of growth that turned early tech investors into legends. They see a low stock price and picture a multi-bagger in the making. The chatter suggests BigBear.ai is poised to capture a slice of the massive commercial AI pie. The underlying belief is that its technology, battle-tested in the high-stakes environments of defense and intelligence, can easily be adapted for Fortune 500 companies, leading to an explosion in revenue. But that's where the expectation starts to diverge sharply from the current operational reality. The challenge for BigBear.ai isn't the quality of its tech, it's the nature of its customer base. The company's lifeblood is the U.S. federal government, a customer that is powerful and reliable, but also slow-moving, budget-constrained, and bureaucratic. The recent 2.02% slide wasn't a random fluctuation. It was a tremor reflecting investor anxiety about upcoming federal budget resolutions and the persistent question of whether BBAI can truly break out of its government contracting shell. Let's dissect the recent trading activity. The volume on that down day was moderately high, suggesting that the move wasn't just market makers playing games. There was some genuine selling pressure. Sophisticated traders using platforms from interactive brokers would be looking at the order flow and seeing that institutional blocks were likely being trimmed. This isn't the frantic retail selling you might see in a meme stock, it's the quiet, calculated repositioning of larger funds. For a stock like BBAI, which has a significant retail following, this institutional movement is a critical signal. While a new user on a SoFi trading platform might see a buying opportunity, a seasoned investor managing their individual brokerage account at Fidelity is asking why the big players might be reducing their exposure. The answer often lies in macroeconomic factors. With ongoing debates in Congress about the national budget and specific departmental appropriations, any hint of a slowdown in defense or intelligence spending sends a chill through stocks like BBAI. This isn't a concern that typically affects Apple stock or even Tesla stock in the same direct way. BBAI's fate is uniquely tethered to the political winds in Washington, D.C., and that creates a layer of risk that isn't immediately obvious from its marketing materials. The stock has been caught in a choppy range for weeks, demonstrating a classic battle between the long-term AI growth story and the short-term reality of its revenue sources. The company's last earnings report was a perfect illustration of this tension. The numbers themselves were decent, meeting expectations on some metrics and showing modest growth in their government-related segments. But the conference call was what really mattered. Management spoke at length about their efforts to expand their commercial footprint, but the tangible results were still nascent. The guidance they provided was cautious, heavily contingent on the timing and awarding of specific federal contracts. The stock initially popped on the headline numbers, but then faded throughout the following days as analysts processed that cautious tone. This is the expectation versus reality gap in action. The market wanted to hear about a major commercial breakthrough, a big new private sector client that would validate the growth story. The reality was a message of steady as she goes in their core government business. For investors looking for steady, predictable cash flow, this might be fine. But for those who bought into the narrative of explosive, high-margin growth, it was a disappointment. This is where diligent online investing requires more than just reading headlines. It requires listening to the subtext of management's commentary. It's the difference between simply buying a stock and making a true investment. Many people using investing sites are looking for straightforward stories, but BBAI is anything but. So what does BigBear.ai actually do? In simple terms, it provides decision intelligence. The company uses AI and machine learning to analyze massive, complex data sets to help its clients, primarily the Department of Defense and the U.S. intelligence community, make faster, better decisions. Think of sorting through satellite imagery, communications intercepts, and logistical data to identify threats or optimize supply chains in real time. Their core platforms like Observe and Dominate are designed for these incredibly high-stakes, secure environments. This is not the kind of AI that generates images, it's the kind that is used to gain an operational advantage. The business model is built on securing long-term, multi-million-dollar contracts with various government agencies. This provides a certain level of revenue visibility, but it also means growth comes in lumps. You can go quarters without a major new contract announcement, leading to investor impatience. The company came to the public market via a SPAC merger, a path that often comes with a lot of initial hype that can be difficult to live up to. Its performance since then has been a roller coaster, reflecting the market's struggle to properly value a company that sits at the intersection of slow-moving defense contracting and fast-moving technology. Investors who use services like Schwab Intelligence Portfolios might find BBAI too speculative, as its performance metrics don't fit neatly into traditional value or growth buckets. Comment below if you think BigBear.ai's deep ties to government contracts are a strength or a liability in the long run. Looking ahead, the future of BigBear.ai hinges on its ability to resolve this central conflict. The bullish scenario is compelling. If the company can successfully leverage its stellar reputation within the federal government to land just 1 or 2 flagship commercial clients, it could completely change the narrative. Imagine a major logistics firm or financial institution adopting their platform. It would serve as powerful validation and open the floodgates to a much larger, more profitable market. Another potential catalyst is consolidation. A major defense prime like Lockheed Martin or Northrop Grumman could see BBAI as a valuable bolt-on acquisition to enhance their own AI capabilities. In this scenario, today's price could look like a bargain. This is the outcome many active traders hope for when they engage in self-investing on platforms like Fidelity or Interactive Brokers trading. However, the risks are just as real. The most significant risk is client concentration. An unexpected cancellation of a major contract or a shift in government spending priorities could have an outsized negative impact on revenue. Competition is also heating up. It's not just other government contractors, it's also large tech companies like Palantir and a host of smaller venture-backed startups, all vying for a piece of the same pie. Furthermore, the path to profitability has been a struggle, and the company may need to raise additional capital in the future, potentially diluting existing shareholders. For an investor looking for investment help, understanding these risks is crucial. The expectation is that their superior technology win out. The reality is that in the government space, technology is only part of the equation. Relationships, lobbying, and navigating bureaucracy are just as important. The company has to prove it can win on both fronts and also translate that success to the entirely different landscape of the commercial sector. In summary, the story of BigBear.ai is a fascinating case study in market perception versus operational reality. The daily 2% swing is not just noise, it's a reflection of the market's ongoing debate about the company's true identity. The prevailing expectation is for BBAI to become the next great commercial AI success story, a small-cap disruptor that leverages its government pedigree to conquer the private sector. The more sober reality is that it is, for now, a highly specialized government contractor with promising technology but an unproven commercial strategy. Its future success is not guaranteed and depends heavily on navigating the complexities of federal budgets while simultaneously executing a difficult pivot. Understanding this dynamic is the key to making an informed decision, moving beyond the simple hype and appreciating the nuanced reality of this unique and complex company. Disclaimer: this video is only for